So I thought we would get started talking about what's happened over the course of this year and all of the new developments in the staking world and how they're affecting each of our projects. Maybe Zaki, you can start and we can go around.
Yeah, I guess like one of the it's come up in Brian's talk and in the earlier talks. Eigenlayer restaking has been like a huge factor. So in addition to co-founding Sommelier, I've been working on a sort of small staking business called Inclusion. So we run validators mostly on Cosmos chains, but restaking has been a kind of a huge factor. Now you have all of this demand for all this additional service. Also, Sommelier plans to integrate with Eigenlayer and Ethos to enable ETH stakers to be securing the Sommelier network. Right now it is Som stakers who secure the Sommelier network. I think that's probably like one of the biggest changes that's sort of in motion. And we're like actively building the Ethos integration now and planning to sort of change the way staking works in Som. And I think it is like moving from every Cosmos asset having their own staking token and staking their own validators towards this model of it's only like sort of more and more security comes from the big liquid assets. I think is going to be a big change in the entire staking economy.
Ryan, Core's one.
Yeah, I mean, aside from restaking, I think I talked about it a little bit earlier. On Ethereum, I think a lot of just like figuring out actually there is a lot of things that validators can do to optimize yield. And then I think that, of course, triggers a lot of discussion again on like Ethereum protocol development and like what does it mean, where does it go? So I think that is something that's kind of come up in the last year that I think is a significant thing and will have an impact. Another thing that, I think is becoming like an important topic is, I guess, the whole like ETF topic as well. And, I'm sure we will see Ethereum ETFs and Solana ETFs and things like that, and those will be staked. So I think that's another one. And I guess maybe this is again like a sort of Ethereum staking topic, but it doesn't seem to be discussed like that much. But I think the centralization around block building also seems like a very important topic where, today you really have kind of, 3 builders who are very dominant, and 2 of them are like basically big market makers, trading companies, which seems very counter to the kind of desire and vision of Ethereum. So I think there's a lot of discussions there around, where should it all go?
Yeah, those are some excellent points, Brian. I would love to discuss them in the panel later. And you also mentioned Ethereum protocol changes, right? So I think like within blockchain, what we have seen so far is that we initially develop a protocol, and the protocol has certain credible signals that it can, make programmable contracts over. However, what we found later is that those credible signals are not enough for the contracts that we want to express. So like, say, for example, many applications of restaking, I think, include things like, execution tickets or inclusion lists in Ethereum. And then for those, they are essentially a way to, allow the Ethereum protocol or Ethereum validators to provide credible signals about things that are happening within the block time, which is something the original protocol doesn't support. And I think because there is so much desire for such out-of-protocol solutions, we see more and more centralized entities providing them because, it is indeed better, I guess, UX or developer experience that people want. So it would happen. What we, I guess, should do is to think about how to use a decentralized solution, or at least to make the services that they provide credible in the crypto native way.
Yeah, I think everyone brought up centralization risks, which is one of the biggest risks in the ecosystem, and one of the things that the Ethereum ecosystem and other chains have been working and trying to make improvements in order to address. Maybe we can talk about what those challenges are in terms of centralization and what you think are good solutions to try to fix them in that ecosystem and others?
Sure. I think like one of the biggest challenge. So there are like a bunch of different challenges. In the Cosmos ecosystem, one of the bigger challenges has been, the dominance of exchanges and exchange staking. So, centralized exchanges and their staking programs have been a huge component of, the entire staking industry. And you also, I think we have like a lot of different concentration risks with staking tokens. In the early days of networks, it tends to be like, investors, early backers of the protocol who have most of the staking tokens. It takes a while for that to evolve, but then you tend to also have a lot of people who just like the convenience of staking on Binance or Coinbase or any number of other exchanges. And, so all of these things have been a huge challenge. Cosmos has had built-in delegation, so it's been easy to choose, but you still have to self-custody, all of these things. And then on top of that, you have in Ethereum, liquid staking is incredibly dominant and can be thought of as either a force of centralization or decentralization. I think it's very controversial. And in Cosmos networks, Solana, etc., the liquid staking providers are also sort of a huge force in terms of validator selection. And I think all of those things are huge elements.
Yeah, I'm curious, just why so different between each of these chains in terms of how people in these ecosystems approach staking? Something we were chatting about for a moment, but I think people would be interested in.
So I guess I'll just, maybe I could start with talking about how I perceive them to be different. So on Ethereum, liquid staking, financialization of staking, so leverage staking, all of these things, incredibly popular activities, drive a huge amount of activity on chain. Sommelier is actually is a protocol, it's an app chain that powers Ethereum. One of our biggest areas is actually providing like sort of automated vaults that like sort of take your staking, and instead of earning the base staking yield on Ethereum, it uses things like leverage staking and providing liquidity for various liquid staking tokens to give you 3-4 times as much yield as just staking Ethereum. So you have this incredible amount of DeFi activity that is layered on top of staking on Ethereum. On Solana, on Cosmos, it's a fraction of that. Maybe less than 10% of the stake is participating of staked Soul or staked Atom or staked TIA or staked DYDX is like actively involved in any sort of DeFi activity. So I think there's this huge delta, and I think it's like a really interesting question as to whether or not everything converges to looking more and more like Ethereum in the long run, or whether or not the culture of these things. I spent almost 2 years building this system, like making changes to the basic Cosmos staking module to make it easier to interact with liquid staking. And after all of those years, finally getting it on chain, no one essentially has used these new features, and it's actually been quite disappointing from my point of view. But I think there's an interesting question as whether or not all these cultural things are why staking is so different, staking behavior is so different, is sort of locked in.
Yeah, I mean, I think I think the answer is pretty simple, and I think it's just primarily around the Ethereum staking design, right? Where you had, when Ethereum launched, right, you could stake ETH, but you couldn't unstake it, right? Because it went on the beacon chain, and they were like, oh, at some point later, there's an upgrade, then you can unstake it. So that on its own, we're like, well, if you lose LIDAR, right, you could put it in there, you get staked ETH, or you could sell that. So of course, there was like a massive, massive factor that drove that. And then the other thing is, 32 ETH increments or minimum staking. And so I think it's really the Ethereum protocol decisions that have driven that. Because even if you look at staked ETH, most people who use LIDAR and do stake ETH, they wouldn't then use it in DeFi, right? They would just hold the staked ETH. And if that's all you want on other chains, there really isn't much of a reason to use liquid staking, right? Then you can just stake directly. And generally that's like lower fees, and the user experience is basically equivalent to using liquid staking, maybe even easier in some cases. So I think that's really something where, in the end, the sort of, I mean, Ethereum staking, right, I think was kind of designed around this idea that we'll have lots of people who run their own validators, and they'll have 32 ETH, and we kind of try to cater to that, and that just is not really the reality. And then I think people have built essentially things like delegation on top, and I mean that has caused this huge rise of liquid staking. I do expect that in other chains, liquid staking will grow as well, right? So let's say Solana on 6% today. I mean, I wouldn't be surprised if 3 years from now it's 20% or something significantly higher. But yeah, I think it's really Ethereum staking design, and was that a good thing in retrospect? I'm not so sure.
That's a great segue to because liquid staking, as you mentioned on Ethereum, we didn't include the delegation into the protocol, and therefore somehow deployed an out of protocol market to solve that, which is I guess what we also see in a lot of chains around MEV or the BUIDL layer, which I guess ties back to the centralization thing.
Now let's talk about MEV. How do you think MEV plays into the staking paradigm?
Yeah, and I think so for the very least, to run a staking business basically means you run validators, and then then you can play things called like timing games, which are essentially you could delay the time you submit the block in order to capture more MEV, because the volatility on centralized exchange, given that most of the MEV come from adverse selection in DeFi liquidity providers, then the volatility increases expectation with time. Then you want to delay that as far as possible. However, it's really kind of a behavior that may increase the protocol's misslots, which could be interpreted as lowering the health. So I think that's something we need to think of a solution for.
Yeah, I'm curious, Brian, as Chorus One is a big staking provider, what you think about the changes happening in terms of MEV?
I mean, for us, differentiation for a staking company it's not easy, right? Because in the end, everyone provides a sort of similar service. And, when it comes just to the thing of keeping a validator running and doing it securely and not getting slashed, there's a lot of companies that can do this, and they can do it pretty well. But of course, if you are able to say, well, you can stake with us and, you earn higher returns than with this other provider, then that is a strong selling point, right? And that is something that's not easy to replicate. So I think from our perspective, it's just been okay, we want to develop an expertise around MEV. We want to build things, do a lot of data analysis, modify a client, things like that, because it's a great way to differentiate. And that's been very Ethereum focused. I mean, we've done things on other chains that were more research building things, but less about, operating a different thing that provides higher returns. But, I'd expect that in the future, I'd expect that in the future there will be many more opportunities on many other chains to also do things that, differ a little bit from sort of just running the software, that then allows you to generate higher returns and differentiate. And of course, we expect to pursue these kind of things. And then I think on the other hand, it's of course a job for the people developing the blockchains and developing these protocols to figure out, is this something that's desirable? Is it something that's a problem? Is it something that, has some kind of, undesirable effects? And then maybe there will be protocol changes that come out, and then of course we'll have to adapt to these protocol changes. But I think that's kind of the fundamental dynamic.
Do you have an opinion on MEV?
So I think one of the more interesting aspects of it. So when we say there's a lot of MEV on Ethereum, there's a lot of there's an enormously varied set of, and we'll have maybe there are other opinions, but the vast and overwhelming majority of the MEV comes from Uniswap AMM pools and from liquidations on lending protocols. And it's a choice at the application developer layer to sort of make all of this MEV flow through down into the consensus layer. And so I think a lot of those choices are going to end up being revisited in the next couple of years. I think a lot of the lending protocols are realizing that, auctioning off liquidation rights could, generate, as much revenue as like all of their other activities combined. And with Uniswap v4 and protocols like and AMM protocols like Ambient, they're now with this like concept of hooks. There are ways of containing the MEV within the application and allocating the application layer. So we may end up in a world where there's much less MEV. And so all of these like massive amounts of efforts that have gone into building technology around capturing MEV, et cetera, may become a lot less sort of super relevant than they are right now. I mean, the other thing that you've seen recently is the rise of Uniswap X, which is doing sort of off-chain order matching on, and so again, that like moves MEV into the application layer and off of the consensus layer. So I'm like broadly hopeful about all of that.
Would you consider Uniswap X to be a, satisfying solution to MEV at the application layer, given that it, gives a lot of power to centralized competitors?
I guess like what I would say is I would rather applications try and figure out like what is best for themselves. So like the whole app chain thesis has been, if an application fully integrates everything from block construction to use case, the application is in the best place to figure out what trade-offs are best for MEV for their users. And I think that's generally true. And I think we're seeing that more in general purpose chains as well, that as builders are more aware of the role MEV plays in the overall user experience, if you leak a lot of MEV, it just basically means it's going to be harder to recruit liquidity onto your trading protocol, and your users are going to get worse prices. And these are things, execution quality is a thing that, decentralized exchanges now compete on. And so, you are incentivized to think about MEV, put effort into providing mechanisms for innovation on the MEV layer. And so, yeah.
I see. Yeah, that's a good answer. I mentioned Uniswap X primarily because it's kind of, so like Uniswap, from my understanding, the front end order flow is default to be sent to Uniswap X, which is, so the mechanism is basically you have their own server that market makers give codes. So that basically means you indeed get way better UX theoretically on their Uniswap X platform, which disincentivizes the on-chain liquidity providers because now they get more adversely selected given that they get toxic flow, which means on-chain liquidity is, I guess, a foregone dream.
It's sort of been interesting how this has played out in so far. Uniswap X went live last summer, so we've had about 6 months of doing it. Sommelier, through our vaults, is one of the biggest on-chain liquidity providers on a bunch of different Ethereum pairs. In spite of this like thesis, this sort of high-level thesis, okay, we'll only get toxic flow. Uniswap X has mostly been good for Sommelier vault profitability. It has mostly been an advantage. There's still an enormous amount, like, even though essentially like a professional market maker sets the price, they frequently are sourcing liquidity on chain still, instead of sourcing liquidity from their own inventory. And that has actually been, like, I think, good for pricing as far as we could tell.
I see. Great answer. Although I think like as it goes on, because like the market makers, they're guaranteed. So like in TradFi, we have this MBBO thing, right? Which is saying like you as a market maker, when you provide the quote to, I guess, the order flow, your quote has to be better than the national best bid offer, which is the spread on like the open exchange. On DeFi, we don't have such MBBO things. The only enforceable thing is like, the AMM quotes provided by the LPs. Which in that case would be, if we have less LPs, the market makers can actually, provide a wider quote than it would have been before. And in TradFi, we kind of solve this by saying that, in addition to MBBO, we can like do audits to say like, oh, you did like the best effort. In DeFi, I guess, since we're building a permissionless system that's a major concern. But yeah.
Curious about your opinions, any of you, on the impact that EIP 1559, PBS has had on centralization, MEV, the topics we've been talking about.
Sure. Let's see. So these things are somewhat different. EIP 1559 is this in-protocol based fee, and this movement away from fees going, fees are essentially burned instead of going to the block producers. So this now means that, and like as a practical matter, there's like less fees are going to block producers. Their revenues are dominated by MEV rewards and by the base staking incentives for block producers. So these things have become, has made fees less important from a proof of stake point of view, and MEV and sort of what the base inflation rate is more important from the point of view of users. I'm not entirely sure that I agree that these things have been sort of necessarily the greatest decisions, especially because 1559 was designed during proof of work and not really updated into the transition to proof of stake. I think that there are, it has also had this perverse incentive around on Ethereum once you move to proof of stake, where it's actually very cheap to buy empty blocks. So if you want to censor users of Ethereum for whatever reason, censorship actually has become a lot cheaper in the current 1559 design. I think all of these things could be improved a lot. So there's just a lot of work to be done on in general and sort of core Ethereum protocol design.
Yeah, I mean, I think when it comes to PBS, it seems pretty just if we look at the distribution of stake versus the distribution in block building, then block building is a lot more centralized than the distribution of stake, right? Like in stake, I don't know, we have, of course, you still can say, there's a bunch of centralization concerns. I don't know, I think Coinbase maybe 15% or something, and but it's still let's say the top 3 entities, and I think Lido, it doesn't really make too much sense to count as one entity, because there's a lot of different node operators that kind of do a bit their own thing, but yeah, I don't know what the top 3 entities amount to in proof of stake, maybe 25% or something, whereas in block building it's it's 90%. So I think from that perspective, it seems like it's got more centralized, and and decent entities are known to block builders. They can be targeted through regulation. When it comes to let's say doing some sort of sanctions list, OFAC, things like that. I think they're much easier to pressure. So to me, it seems pretty clear that PBS has more led to more centralization.
Yeah, I would say the design philosophy is more that stakers and block builders, they provide very different services, right? So I guess, which is the modularity argument that Cosmos people love. But anyway, the philosophy, I would say, is more in saying that so validators provide those services as increasing the credibility of the network or economic security. So it's important for them to not collude. So in that case, if we separate some of the jobs for them, then they would, how to say it? Yeah, I understand it's hard to compare the counterfactuals, but in this case, they would have less of a worry to do the other job, which is block production and optimizing for MEV as much as possible. But of course, given now that we have many other chains experimenting a route very different from PBS, it will be extremely interesting to see how that pans out.
So we've talked a lot about what's changed and evolved in the staking landscape this year, but what kinds of innovations do you think are going to drive the next cycle of conversations about staking?
Yeah, I think restaking is certainly a very dominant one, and I think that adds a lot of complexity. For one, today, right, if you are staking, then you hold a particular asset, and then I'm staking this asset, I'm staking Solana, I'm staking Atom, I'm staking ETH or something like that, Now it's already the case, I guess, in the Atom case with interchain security, that now you have like governance voting, and it's like, oh, we're also going to secure some other thing that like maybe you don't care about, maybe you don't know about, and now maybe have some revenues in some other asset. So I think that's already happening a little bit there. But then, of course, it's also the case with eigenlayer, right? The expectation is not that like individuals will choose which eigenlayer AVS they want to run, but it's basically sort of outsourced to someone else, whether that's a staking provider or whether that's some sort of protocol DAO structure on top that will choose a whole bunch of AVSs to run. So I think that's kind of something where, a big change, right? Where maybe people will be more, I'm just providing some capital and I'm just looking at some return and like, what is it exactly being used for to secure what and what are the risks? I think the transparency is going to decrease a lot. People will have a lot less idea about what's happening, what are the risks they're taking on. So yeah, and I think there are some problematic incentives there maybe, right? Where there's a big incentive to sort of say, okay, I'm just going to, do a lot of different protocols. So there's a lot of new tokens coming and, the risk will be a lot less visible. But yeah, I think restaking is going to be a huge topic over the next 3-5 years. I think it's going to take a long time to play out and also sort of unfold as an industry and what the impact is on staking overall.
Xyn or Zaki, trends you think are going to drive the narrative this year? Restaking, something else?
So I think one of the big, like to most users, I think for staking providers, I think restaking has opened up like all of these new business decisions that need to be made. But for users who have assets that are stakeable, I think one of the biggest things is is just this move from, when I stake my ETH, now I have this huge menu of different assets that I could be earning. I could be earning SOM, I could be earning eigenlayer tokens from EigenDA, I could earn, and so now you have this like vast universe of sort of different portfolio management choices, and how that's going to be presented to users, I think is going to be really interesting. I think on the other hand, you also have this sort of significant movement towards sort of real yield. So like with Sommelier, I think almost half of our staking rewards now are coming from protocol fees rather than from, just like releasing new tokens onto the market. With DYDX, there's no inflationary rewards. All of the rewards come in USDC from staking for DYDX. Ethereum validators, Ethereum issuance, during bull markets is negative. So I think more and more, as staking, as like these applications and networks actually start earning more real revenue, I think the model of, hey, like this is only just printing tokens from thin air to drive staking sort of is going to fade, and you're going to see more and more networks that are driven by real yield.
Amazing. Would you? There's a question I actually want to ask. Sorry to
Go for it.
Get the moderator. But so given restaking and the perspective of yield, significant yield increase from restaking, right? Given that, say, a lot of applications on EigenLayer, they're actually not protocol innovation applications, but like a lot of applications that are even related to AI.
Sure.
Would you guys expect, I guess the participation rates in stake to greatly increase, and how that changes the business perspective? Would you be more, say, yield or retail facing?
Yeah, I mean, I think we've already seen the ETH staking participation kind of continually go up, and the reason is kind of simple, right? Because the risks are very minimal, and if you're holding ETH anyway, why not earn another 4% or something like that? I mean, I get that there's like some desires maybe in some of the Ethereum community that they think this is not a desirable thing. And there was some discussions around decreasing inflation. But for example, I think that's a little bit naive, and it doesn't make too much sense, because if you think about like what has been driving a lot of the stake increase, I mean, first of all, if you're holding it anyway for the long term, then getting an extra 4% is great. And if it's like 2.5%, it's still probably something you'll do. And of course, the other thing where that's been driving this to a huge extent is people putting ETH into EigenLayer or like these restaking protocols, and that's also not affected by the base rate. So I would expect that it will continue to increase and continually more ETH is going to be staked. But I don't think that's a bad thing.
Yeah, but what kind of applications would you be thinking about from that is uniquely unlocked by restaking, which is
I don't think anything is uniquely unlocked by restaking. It's just an alternative to creating your own app chain or your own rollup. And then I guess Zaki is probably the great example there who can talk about this.
Yeah. I think one of the big benefits of restaking, right, is the audience for your token is so large, right? You have an asset like ETH or an asset like Bitcoin, many holders all over the world. And there's a lot of people, I'd say our experience has been there's one small population of people that are like, we want more ETH yield, and we're willing to do DeFi. And then there's a much larger population that's like, I want to do staking. And it's likely that the restaking and population will fall somewhere in between the people who are willing to earn DeFi yields and the people who are willing to earn staking yields. So that tends to be a very large audience. And I just think that being able to have such a large, being able to present your token, present your application to such a large audience is one of the biggest advantages of restaking and one of the reasons it's so interesting.
Yeah, distribution.
Yeah, and I guess sort of on that point, I think another thing that's going to become very interesting around staking is, we have a big explosion in Bitcoin L2s and Bitcoin. Called L2s, right? But I think not roll-ups in the sense of the Ethereum roll-ups, at least not yet. Maybe they will be at some point, but more kind of Bitcoin side chains, and many of them are incorporating some degree of Bitcoin staking, Bitcoin yield. So I think that's also gonna bring in a huge new population of people who've just been Bitcoin holders and now all of a sudden exposed to, I can use my Bitcoins to either earn some other token or maybe earn more Bitcoins on it. And I think that's also going to be a very big trend.
So we have a couple of different ecosystems. We have Bitcoin coming in, we have Ethereum, Cosmos ecosystem, Solana, then we have a lot of new protocol updates and technologies. So how does a user or a potential staker actually decide between different options for staking? You go to staking solutions websites, you see very secure, a certain amount of yield. How do you make that decision as a consumer of staking, which provider to go with? And maybe you can break that down into who the different audiences are for staking, because they're different.
Yeah, sure. Right. First of all, there's a huge range of different audiences, and I think they make the decisions very differently, right? You have, let's say, if you take the Cosmos chains, well, you'll be there, you have a whole validator list, and then what are things that people consider? Well, they will consider, for example, commission rate, right? That's a significant one. They might consider the brand of the validator, and then, of course, there can be different things where maybe it's well-known brand, an institutional, or something else is they're very engaged in the community, or they vote a lot in governance. So I think the wide range of factors there. And then, of course, you have other types of, let's say, more institutional clients that will look at other things. For example, last year we made a big effort. It was a lot of work to get ISO certification, right? So you basically have some external body that does security audits and assesses a lot of, and that's something normal people do not care about that, but then when it comes to more institutional audience, they do. Or insurance is another thing that's now there is availability, right, for insurance offerings, both sort of more DeFi insurance with Nexus Mutual on Ethereum, but including more traditional insurance companies. So and I think you have a whole bunch of different criteria that people look at.
I think one of the other factors is frankly political. I think all validators, LSTs, all of these things, choosing to stake with them has an impact on the future evolution of the asset. And I think people sort of over-index on things like commission, and under-index on, how are you collectively incentivizing the people who are sort of involved in the protocol maintenance and stuff like that? Validators review code. They have a lot of influence on, future protocol evolution. All of these things, I think, should make a bigger difference when you hold an asset who you choose to stake with.
Yield.
That's a great note to end on. Thank you, everyone.
Okay.